What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over why we don't chase stocks. Check it out. Well, guys, I used to buy breakouts when I first started trading, and I couldn't figure out why I just kept losing. And I mean, I'm talking about buying breakouts, not it broke out, it dipped back, and then you bought it, and buy the dip, sell the rip type thing. No. I'm talking about buying breakouts. How many of these gurus teach newbies to do $50 breaks, pre-market breaks. They just buy them, and then they set a trivial 10-cent stop, and if the stock pushes, well, they just take profit, as it goes, or add, and all sorts of stuff. And while some people are able to make a lot of money buying breakouts, they also lose a lot of money when breakouts don't work. And a lot of times breakouts just don't work, and you get nasty flushes. And the same holds true for chasing, stocks as they do their breakouts. So like PNRL, this is why I don't buy this crap when it makes these moves. PNRL breaks through $2. That's a whole dollar break. A lot of people will teach you that that's a good area to buy. It gets halted. No, it doesn't get halted, does it? Well, maybe it did. I don't know. It pushed back down, and then it made a huge move from $2. These are 3-minute candles, all the way up here to $3.65. So if you would have bought $2, you would have made money. If you would have bought $2.50, you would have made money. Bought $3, you would have made money. But eventually, this has to not work, right? Well, it keeps working. It gets halted here at $3.59, gaps up higher, and pushes all the way to $4.60s. You would have made money again. FOMO kicks in. Some new traders come in, they buy this, it halts, resumes higher, they chase it up here, they buy it, they sell, they make money. It continues to happen. And you're like, well, damn, I didn't buy it here, I didn't buy it here, I didn't buy it here. I'm going to buy it here at the $7 break. And you sell up here, close to $8, and you make money. Then some new traders, or yourself, are like, well, damn, I should have held on because it went almost to $9. They rebuy this $8 break, and it halts. Now, you have two things going on here. The people who chased it up here at $8, and we got halted, up here in front of $9, are like, well, damn, this is going to open up at $10. It's going to go to the moon. New traders who did not buy here, none of this, are anxious for the resumption out of the halt to just buy into it, market order in, right out of the halt. They don't care. They're not going to wait and see what it does. They're just going to buy right on in because they're going to chase it, because we're going to $10, right? Stock to it's the moon. And then all of a sudden you go from 878 all the way back down here to 690. From almost 890 all the way down here to 690. That's $2 a share. If you bought 1,000 shares here thinking we were going to halt and go to 10, you're instantly down over $2,000. If you bought out of the halt and you got filled in here somewhere above 8, you're instantly down. Nastiness. Then it halts going down. That's usually not a good thing. And it's a long halt, killing momentum. And you get the gap down all the way down here to 553. Chasing like this doesn't work. It works until it doesn't. And when it doesn't work, it's nasty. Nasty. Look at that. And now where's this stock at? All the way down here in the 480s. Oh, but I'll average down. Yeah, you could average down. What if this thing decides to go all the way back down to $2? Then what? You're sitting at, 5,000 shares at $4 or $5 if you average down from up here in the 8s or in the 6s. That's rough. Like, this is how you blow up accounts. This is exactly how you blow up accounts. Chasing stocks without having a plan in place to exit if it goes against you. Chasing works until it doesn't. I never held a bag when I used to trade like that, that wild first new traders type stuff. I never held a bag because I did understand one thing, and that's they don't have to come back up. HMNY, if you've been around trading for any sort of time, let's see if that chart even comes up anymore. You know about HMNY. Now look at this daily, and you're going to tell me that averaging down works because stocks always come back up. Look at this daily. Obviously, it's had a million reverse splits, okay? Let me make myself smaller. This stock went all the way up here, which is not $9,000. I think this is like 30 or 40 bucks if I remember correctly. And then it had reverse splits galore, okay? This stock currently trades, this was back in 2017. This is the stock that invested, this is the company that invested in MoviePass. And we all know MoviePass and what that did. This stock is currently under a penny. That is what the value of this stock currently is, under a penny. So you're going to tell me that they always come back up, that you can average down infinitely? Doesn't work. Doesn't work. One can get lucky. One can get lucky, obviously. But that type of luck runs out. And you get HMNY type plays. You get DRYS type plays where the stock just becomes total trash. Especially these small caps, these micro caps, these penny stocks. We all know that these are fly-by-night companies for the most part, right? Or if not, they're biotechs that have to do offerings continuously every time they get a nice pop because they burn through cash. Their cash rate, their burn cash rate is absolutely astronomical because trials on meds, on drugs cost a lot of money. So they dilute and dilute and dilute until the stock barely moves. These are things that we have to keep in mind, especially when you're a new trader, and understand that these stocks don't have to go up infinite. They don't. HMNY, prime example. So you got to make plans. You got to know what you're doing and try, my personal opinion, to not chase momentum and rather wait for pullbacks to a support area where you can get long in front of comfortably knowing your defined risk, especially for new traders. Now, some people chase momentum and they make a boatload of money, like I said, and they're right more often than not. If they are right more often than not, well, then of course they're going to be profitable. But they do get those nasty losses sometimes that wipes out an entire month of profits because it's not easy. So I think that it's not easy for new traders specifically and very dangerous for new traders with small accounts. Not to mention, guys, that a lot of times these furus, when they'll alert buying a breakout, they have bought usually a little bit before then, and they sell into the breakout and dump all their shares on their unsuspected followers. So you'll get action like this. Look at this. Obviously, this is not something that was in play today, but often when it is in play, the chart will look like this. So you'll have, let's see here. You'll have somebody put out an alert buying $4 breakout. They buy it. I think they buy it before, but let's say they buy the $4 break and then they sell into that push to 440. Then they put out an alert that they sold. And when they put out their alert that they sold, this is what happens. Look at that. From 440 all the way back down here to $4. It's 40 cents in the blink of an eye. And then lower because everybody in the chat room is selling out. So lower and lower and lower, and this keeps happening until you get this action right here and it just fades. And shorts who saw this hit like a high day momentum scanner, saw that there was no news on it, saw there was no volume on it, they just short the stock up here and then they ride it basically for the rest of the whole day, letting it fade out. So that's something that one needs to definitely keep in mind when their furus are putting out buy and sell targets when there's no volume and it's just a random breakout with no catalyst, no nothing, no setup. It's just trying to chase the momentum. If there is no momentum there, chances are you're going to get dumped on, just like you see here and just like you see on some other stocks. PNRL, this one just moved so much today that it actually, held some sort of, I don't want to say volume because the volume has dried out, but it's held people's attention. Since it moved so big from $1 something all the way up here to $8.75, people are still watching it. And if tomorrow wasn't Thanksgiving, I'd continue watching this to see if maybe out of lunch we break up over VWAP. If we break up over VWAP $6, $7 is imminent. And if we break up over 7, which is its previous halt price to the downside, we'll get some shorts covering more than likely, and that could send us to $8, $9, $10. even though this thing had no news today. But if the momentum is there, in other words, the volume is there, it could send this thing flying because it's pretty small float on this stock right now. So these are just things that one needs to keep in mind when it comes to these breakouts and furus and the whole thing. You know, you want to watch volume, you want to know what the catalyst is, you want to see the big picture on the daily chart. You know, oftentimes you'll break into a resistance and it'll just get rejected extremely hard. So you need to look and keep all these things in mind. Let me know what you think. Drop it in the comment section below. What type of strategy do you prefer? Drop that there as well. Smash the like button for me if you enjoyed the content. Subscribe to the channel, and I'll catch you on the next one.